Yesterday, with both the euro and equities not having performed, everything was against the rand. Some saying we've got 805 in sight in the next few days. That's a possibility. What's your view on the range for today, at least?
Well, yesterday, Alishia, we had better than expected PMI data out of the Eurozone, but it wasn't really enough to allay fears surrounding another setback in the Greek debt negotiations. Initially, we saw the Euro finance ministers rejecting the deal, the initial agreement between private bondholders and the Greek government, which basically really puts the talks back at square one. We saw the mood slightly offbeat yesterday, but as we progressed through the day, it became slightly worse as fears reignited surrounding the vulnerable Eurozone economies and the potential for default. So we did see the euro slip quite a bit off those highs that we saw recently, and the rand followed suit. But this morning it seems as if the mood is slightly more positive and that the rand has strengthened again in early morning trade. However, we could possibly see conditions deteriorate further as we go through the day, as talks surrounding the Greek debt negotiations continue, and we could possibly see a move back towards the 8 rand level should conditions deteriorate. However, if we do see a move towards 790 sustainably, we could possibly see that rand move towards 787 or possibly even 782.
Overall, though, the rand has simply just not been able to shake off what's been a very bearish tone this year so far, right?
Yes, that's correct. We are seeing that the rand is and has been wedded to the euro-dollar movements. And if we do see conditions out of the eurozone, as I mentioned, deteriorate even more so than what it has been, and with regards to the recession, as the IMF has pointed out, we could see the euro come under renewed pressure, and we could see that rand follow suit.
Of course, all eyes on the euro on a day-to-day basis. So today, though, some of that focus shifts to the FOMC and the kind of rhetoric, most especially, we're going to hear from that end, specifically because of the implications it could have on the dollar. Shireen, lower rates for longer, pressure on that dollar moving forward.
Yes, there will be some pressure, but as the FOMC meeting gets underway, or rather we get ready for the announcement, we have to bear in mind that the Fed is likely to announce its forecast on monetary policy going forward, and it's the first time that the Fed is going to be doing this. So if we do see a very hawkish tone come out of the FOMC, we could see the dollar strengthen. But at this point, all eyes are on the fact that the conditions remain quite bleak in the US as well, and we could see further pressure on the dollar.
What are your broad expectations when it comes to that commentary? Because as you highlighted, it's for the first time that the Fed's going to be starting this new practice of announcing policymakers' interest rate projections moving forward.
Yes, taking cue from what the IMF has indicated yesterday and the fact that we're going to see lower growth come through for this year and next year from both the developed and emerging market economies, we could possibly see a more negative sentiment come through. We did see Obama yesterday indicate that there's going to be some policies coming through to try and keep consumers and the economy going, but what is concerning is the fact that growth is not really picking up and there's no stimulus involved. So we are expecting to see the FOMC statement really come through with, as you mentioned before, lower rates for longer. In fact, they had mentioned previously that they could see...
Sorry to interrupt, but the major reason for that downgrade coming through, Shireen, on that global growth forecast that was cited by the IMF was Europe's debt crisis. And you alluded to it a little earlier on, but that PMI number coming in strongly. How are you actually marrying the two at this point in time, where there's this concern on the one hand, but the data point that filtered through, yes, it's just been one, but certainly encouraging on the other end?
Yes, it is 1 point and it is encouraging. We did see the PMI come in above the 50 benchmark level, and it is possibly an indication that growth could possibly be picking up. I mean, this is against what the IMF has said about the recession, but I don't think we should put too much emphasis on the fact that we just saw one growth print. We need to see a sustainable move above that 50 benchmark level to see any kind of turnaround in the Eurozone economy.
Absolutely.
But we are
Having said that, Shireen, just how much attention have you paid to Japan's trade data this morning? Because it showed that the country logged an annual trade deficit in 2011 for the first time in 31 years, as expected pretty much. And we've seen little reaction to that news on the yen.
Little reaction, as you mentioned, but the fact is that Japan has had a legacy of trade surpluses, and having gone into a deficit territory for the first time since 1980 is really a bit concerning, especially given what the global economy is in and how the Japanese economy is going forward. Yes, it has been impacted by what has happened at the beginning of last year with regards to the earthquake and tsunamis, but it's also on the back of the fact that we're seeing lower demand globally, which has impacted on growth in the Japanese economy.